Well, good evening, all. Ira Epstein, and here we are on Wednesday, and I'm already watching how it's already changing. I know it's summer, but the sun is starting to go down earlier. You know, every day we get a few seconds. I hate it. It is now August 6th, 2025, about 7:05 p.m. or so Central Time. And this is, of course, your financial market wrap-up. As you can see, you've got a mixed bag so far going in the energy sector, but you're pushing the $67 mark in Brent and about 64 in CLU, which is the WTI. Natural gas tried another rally. We'll see if it can hold up here. I'm beginning to think around that 306 level is a number I've been looking at. It seems to be like a neutral number in the market for the moment. Bonds and notes, well, we have a huge auction tomorrow. You're aware of that. The U.S. Treasuries taking the stance that interest rates are going to fall, and they're going for monstrous amounts of money short term. I think it's the largest. I think it's $100 billion tomorrow in 4-week bills. We're going to see how well this is all taken, what they have to get in order to do this. It's a huge number that they're going to do. And I get it. If they do believe that interest rates have peaked out and the Fed's next move is right around the corner, why get involved in the long end of the market, move everything to the short end and try to catch up with that? It'll make their balance sheet look better. Remember, nobody's talking of cutting debt. This is all going to come home eventually. But they're playing games with it. The gold market. Overall, I'm still of the opinion gold's got a ways to go to the upside. I can make arguments still that the stock market, and I even tried today for my subscribers, probing the short side, just didn't work. Wasn't a big move. It was mini markets and just about what I'd call a normal loss when you get one in the market. Not even medium risk. It was on the lower side. The dollar got smashed. It's still stuck at the 98 level. You're approaching 117 in the euro. What about news? Well, let's see what we have tomorrow because there's a lot to talk about. You got jobless claims. I think all eyes are going to be on this because now what do we trust? Jobless claims, they don't seem to revise very much. The jobs report, that is a different story. Second quarter preliminary non-farm productivity will come out. Obviously, cost is going to be an element there. We'll get another Fed speaker in Bostic talking tomorrow at 9 o'clock. President Trump, well, today he called a press conference once Apple bought their way into the White House, promising another $100 billion in the 4-year package that they've already promised $500 billion for. That brings it to $600 billion. And you haven't heard from Tim Cook around Washington, D.C. Suddenly he's with the president and all the boys. He's back in the graces. We'll see. The key here is the president also said during that conference that if any company is going to get a 100% tariff on chips and semiconductors coming into the U.S., he didn't say when, but he said this is what he's going to do. But they're waived from that if the company's building factory in the U.S. to manufacture chips and semis. I'm sure there's more to this because so much of this flies right from the hip as he's talking, but we will see. It's the art of negotiation again. You're seeing more and more products, though, are being made. Corning's going to be one of the big winners, is they're making the glass and whatever they call that makes up the iPhone. And as they're making that, it's not going to be just U.S. phones. Now it's worldwide that they're going to get the business for. So that's going to cause expansion. And, of course, Apple's going to be building other factories for other of the products that go into these, not only just phones, but other items. We then heard that President Putin has talked to Special Envoy, U.S. Envoy Steve Witkoff, and he wants to meet with President Trump. Well, Trump said, okay, I might be willing to do that, but he wants to get Ukraine President Zelensky involved in the talk. We'll see what Putin does. I still expect that the president is smart enough to slap the tariffs on Russia this week, keep the pressure on until you can get somewhere and you can always take them off. Once burned, that's not his fault. Twice burned, that's his fault. He's smarter than that. He'll keep the pressure on from what I can see. Brazil playing a crazy game of dice with the president. So he told them, okay, you're going to get now on top of the 25% tariffs, let's add another 25%. That'll go into place in 3 weeks because you're still buying Chinese oil and you're saying you're going to continue to buy it. You can go up to 100%. There'll be a point where you don't do business with Brazil. So you coffee lovers and OJ, there'll be a point where it doesn't make sense to get those products out of there unless there's more movement between Putin ending in Ukraine. Then that oil can be sold to Brazil. Then you can unwind it. If you're looking for logic of it, don't. Why isn't he going after China, the biggest buyer? Not a word about that. This is all the art of negotiation, and you can get dizzy in it because the goal is to keep you on your back foot, keep you just off balance, all right? That I think is what this is about right now. So when we take a look at what's going on, you're still hanging near the highs in the S&P on a closing basis, and you've gone nowhere on this sideways action. I kept this chart a little smaller so you can just see how that is. Now I'll blow it up here, and you can see the pattern today shifted. When I was looking at the pattern prior to how the day ended up today, the market had a pattern of, as it turns out, a lower high and lower low. I thought the market should not have gotten back over the highs that it made just the other day, and it did. And that takes me out of the bear pattern in the market. The resistance that I saw was right here at the 18-day average. So don't think that, a big loss in that. That's not what it did. You can see how small that would have been. But I don't think you can be short right now. And I think that my words of wisdom were lost on me. I think you've got a market that's just gone into the whipsaw phase right now. I could be wrong. The market could take off to up or downside. I don't see it. I think today was proof that even when you're hanging around this center line, it's not easy to get something that's lasting. Momentum turned a little bit back to the upside, and you can see how that's hanging at the 18-day average. The NASDAQ is the same type of package, higher highs, higher lows, but it did not get back over here to the 18-day average of closes. When we come over to the Dow, you can see momentum's about flat. You have a higher high and lower low. This is more similar to what I'm seeing, that neutral package. And you still got a down package in the Russell where you got lower highs, lower lows. There's nothing I see here to take you out of the bear side unless you get over that high on the current chart formation. In the DAX, this is what we were looking for. We said when the market popped back up the other day over the Bollinger Band, now if it wants to run, maybe the 18-day average, and that's what you're doing. A lot of these charts are going back to neutral formations, in my opinion. In the bond market, you're trying to develop and get that embedded reading going. So let's not count tonight. We know on Wednesday, let me come back here, both numbers were over 80. Let me get back to Tuesday here. On Tuesday, both were over 80, and the day before. So you have your embedded reading. Embedded readings mean that the pros are probably buying the market all the way down into these areas, as long as the red line doesn't close under 79. If it does, they back off. And what this also means to me, when you see this and you don't see it in the front end of the market, means the curve yield's adjusting a bit. We're now seeing the back end slip a little bit more here. And when you come over and you take a look, for example, at the 5-year, you have no embedded reading. Just had a market that got to the Bollinger Band, void of a trend completely with a lower and low, higher high pattern, and you're drifting around. I'm going to repeat. The Treasury Department is making a big bid in the market. A bet is probably the better word. And that is that interest rates are peaking and they're going to keep their debt short term so they can take advantage of this on the rolls. We'll see if that works out for them. The dollar flipped back to the bear side today. So after this monster rally that carried you from, remember we were talking that fourth price count. If it got down and went any further down, you can go to the 90 level. It came back up. It negated that. The question is, what are we now? And I'm thinking of doing my special report. I started laying out all the charts today. I still haven't done it. I got busy during the day, but I think it's going to be on the dollar index and helping you to answer that. The euro went back to the upside. It held major support at the Bollinger Band 100-day average. It's trying to get back into the bull camp at this point. In the British pound, now they're starting to come out word that the Bank of England might be getting ready to cut interest rates again. I expected and said yesterday, I think you could make a run to the 18-day average. pat one on the shoulder there. That's about where you're at. In Bitcoin, are you bottoming out again? That could be the case in this 113, 114 area. It wouldn't surprise me. The market stepped out of its downtrend. It hasn't gone into an uptrend. It's just sort of drifting in prices, I'll say right now. And on the energies, I have a hard time getting real bullish. If a deal is made with Putin of any type, no more aerial strikes for a while, whatever it is, get the first step to ending the war going. If you can do that, and if Russian oil can then be legitimately sold on the market, in addition to the 557,000 barrels that the Saudis are putting on, and in addition to other oil that they cut back, if you'll recall, there's still plenty of that to be made up. I get a very difficult time until the world economies really pick up again, that you're going to be able to pick up the oil prices. See them coming down. I can make an argument for 63.5 or so here. In the gasoline market, you've turned the trend back down with lower highs now. So the big question is the market going to break itself down here? The battleground's the 18-day average of closes, in my opinion. You do have one more big driving holiday coming right at the end of August, and this is a whole month where the families that haven't taken a vacation cram it at the beginning. Remember, schools in different parts of America go back starting mid-August to late August, and they start their school year. So family vacations are coming to an end quickly. Natural gas, got a bear market rally here. Can it hold on to it is going to be the big question in the market. I can't answer that. What I can say is if you lose the bearish reading, which you're trying to do right now, but it's early in the evening, then I can make an argument to get back for price in the 18-day average to come. That might mean a little lower in the 18-day average, but basically steady to higher in natural gas if that occurs. So that's where I'm seeing the markets right now. You can get more of our information by clicking up here in the free offers. I hope you do so. Hope you watch the other videos tonight. I'll catch up with you in those. And of course, first thing in the morning flash update. Have a great evening.